Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the November 4th voting day. Terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, Steve Perseverance Rhodes, and I believe that we should always be pioneers of our future and never be prisoners of our past. And as we begin our day, let's always remember that the caterpillar one day says, hey, I think I was made for more than just crawling on the ground. So the caterpillar climbs a tree, attaches himself or herself to a leaf, spins a cocoon. Who knows what disciplined effort it takes to spin a cocoon? Think about that. But something inside that caterpillar says, hey, I was designed for something more than just being a caterpillar. And then when the cocoon is ready, it opens up, out comes a butterfly, and it flies away. Seems like a pioneer to me. I say become a caterpillar and then become a butterfly. That's what it's all about. Hope everyone out there had a magical Monday. I know I did. And I'd love to hear some of your magic Monday. Any magic moments that you might have had. Just give us a call at 877-927-6648. Internationally, our number is 727-445-1044. This terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show right now. We got Dow futures off about 12 points. No big deal out here. S&P off 3 points. They're trading out of 2007. NASDAQ off 8 points, trading at 41.49. King dollar back 16 pennies, 167 ticks, trading out at 87.24. The euro on the move. The Japanese yen on the move. The pound on the move. Light sweet crude, that's been on the move. It's down $1.38 right now, so it's off its session lows. Silver's down 22 pennies. She's trading out at $15.98. You've got gold off $2, trading at $11.67. Quick peek across the globe out here. I believe it's pretty much flat over in Europe. The DAX here, the DAX is up 1 point. The FTSE down 5. The Nikkei came back online last night, up 448 points, 2.7% out there. So maybe we'll take a look at some of those numbers. I think the place to start to try to put this all together. So we got a flat market out here inside of our indices, right? Our index futures out here. And as you know, you know that my belief, my read on the market has nothing to do with my belief. My read on the market is that we're in for some choppy waters out here for really the next couple of weeks. Now, that could change. I can't control the market. But my read last Friday, my read yesterday, my read today hasn't changed at all. So it's for some little bit of a chop here, maybe a little consolidation pattern that could go on for a bit. So with futures being kind of flat, doesn't seem like that really should be the area that we should focus on first. Instead, let's do it. Let's focus on the area where maybe things aren't so flat. Or maybe and that's really in the commodity sector, right? And so we should look at light sweet crude, I think. We should look at the dollar index because we know that all commodities are measured in U.S. dollars. And so we need to look at the currency pairs. So let's start there. Let's start off with the currency pairs. And since I've got the live data feed for the futures, for the euro futures, let's go ahead and start here versus the actual currency pair. We're basically about one and the same. Now, if we take a look at the euro futures out here, we're going to notice a couple things. Number one, well, what's the first thing that you're going to notice? You're going to notice nothing more than a huge move to the downside ever since May 8, 2014. Kind of a linear move to the downside. Now, that's one thing that we notice. Now, let's go ahead and let's expand this out just a bit. And let's take a look at our current A to B equals CD pattern that is out here. That current pattern, we're going to start with our A to B equals CD to the downside. I'm going to use the high of the session on October the 15th as my A point. I'm going to use this little doji in Stevie's window here. That's on October 23rd out there. And that's going to be our B point. I'm going to use as our C point that little retracement up into the high on October 29th. So what do we know right now about the euro or the euro futures out here? We know that yesterday it made a 1 to just about a 1 to 1.272 A to B equals CD to the downside. We also know that the candle that it formed yesterday was a hammer candle. All right, if we take a look at it right there, that's a nice hammer candle. We know that the candle that is forming here as we speak right now, that is a bullish engulfing. Is the day over? Absolutely not. Are there hammers that have failed out here inside the euro? Yes. The last one was just a few trading sessions ago on October the 30th. Hammer candle out there. If you just simply waited for one more day, one confirmation out there, we would have known. You would have known that, in fact, the euro futures failed at that level. Now, here's kind of another important thing for us to pay attention to out here. Let's take a look at another level of support, which inside the euro futures is 1.2506. Now, we formed a hammer candle yesterday. Price closed just slightly below that. You're trading above 1.2506 right now. The reason I say that is because you have this little piercing candle that took place here on October 6th. So what the euro appears to be doing as we speak right now, it appears to be trying to form a bottom. Now, why is that important? Well, the reason that that's important is because the euro has the largest influence on what the U.S. dollar index does because of its basket of currencies being 6 currencies. The euro, the Japanese yen. So we got to take a look at the Japanese yen, Great British pound, Canadian dollar. That represents 92%, 92 or 97. I think it's 92%. Yeah, 92% of the entire index out here. So the early message at this stage here is that the euro is trying to form a bottom. Now, what are we going to do here? Let's go take a look at a short-term time frame. Right? How will we know if there is a potential change in trend? It's pretty simple. You're going to see A to B equals CD patterns that are going to go in the opposite direction. In this case here to the upside. So let's go to a reasonable time frame here. Let's not go to a 1-minute chart, although we could. Let's go to just simply a 30-minute chart here for the euro futures to see if we can find any how about this? Let's go take a look at the A to B equals CD pattern out here inside of Euroland. Our A point, you can see what I'm going to choose for that, right? I'm going to come all the way down here to this low. This is remember, it's a 30-minute chart we're using, so 1930 to 20, that's going to be 8 p.m. That's on November the 2nd, 2 days ago. That was on Sunday. Yeah. And if we take a look at the B point out here, we're going to come all the way up into about this time frame of about 8:30, 9 o'clock in the morning yesterday. That's our B point. Our C point is this retracement down into about the 1:30 time frame here yesterday as well. And what we can see is that the euro is in the process. It is trying to make that 1-to-1 A to B equals CD to the upside. Needs a bit further to go to get up there. Needs to get up into about the 1.2546 type level. We're not up there yet, but it is trying to create and form its first A to B equals CD to the upside on the 30-minute chart that it has seen in, really the last time we saw one was when it made this top out here back on October the 29th. So that would be an indication to us. We're not there yet. You need to see the euro move even higher out here in order for that to start to become fruition. Then, what do you want to see? Well, what you'd like to then see is after it makes that A to B equals CD pattern, some kind of retracement to make its next A to B equals CD pattern to the upside. So that's what's going on inside of the euro. If we go take a look at the Japanese yen out here, give me a moment. Let's go ahead and we'll pull that up on our screen here. Now, it's going to be in the opposite direction of what you're normally used to seeing. But as we take a look at this currency pair, we're not seeing any kind of reversal here just yet. Of course, that was helping the Nikkei move higher last night as the Japanese yen was getting weaker. The U.S. dollar index was getting stronger. So this one is working against the U.S. dollar index. Now, the reason that we're focused in on this is because we're trying to understand from a commodity standpoint. See, if we could put all this together out here, in my opinion, I think that's how we understand what's going on inside the markets, or at least we have a better better opportunity to read the message of the markets out here. So the Japanese yen not doing a whole lot to participate with us in identifying any kind of reversal out here. If we take a look at the Great British Pound, if we take a look at just simply some retracements here off of its low, the low being the trading day of October 15th, the high out here being we can go ahead and use the level here of October 28th. So we'll see that it's made that 0.618 retracement out here. Did it yesterday, little doji. Does that doji have any meaning at that 0.618 retracement? No. Really, it doesn't. I know that folks like to use dojis on the way down, and I hear people talk about halfway markers, and maybe it is. My studies, mine, Steve-O's son, my studies show that dojis mean basically nada on the way down. I kind of figure it's a fear and greed thing out there. But it has tons of meaning as the markets are moving higher. It doesn't mean anything inside the middle of a move. When you start to get towards, and what I mean by that is it really means something when you get to resistance levels. But otherwise, they're just just means the market's tired. That's all. It's just like working out, It's like doing your 12 reps out there, and you got to really struggle to do that 13th rep or maybe that 14th rep or how many of reps it might be, and you're starting to get tired. Hey, that's a doji when you're working out there. Now, where it does have meaning is today. Why does that mean today? Because today could be a bullish engulfing candle. It could form a morning star pattern out there, meaning that you've got the combination of 2 or 3 candles out here. You could be seeing a bottom. So inside of the Great British Pound, it looks like it, too, could be forming an A to B equals CD to the upside based upon today's candle. So if we see the pound moving higher, then we should see the U.S. dollar. It should influence the U.S. dollar index pulling back. So we know that we've got 2 of the 3. In fact, let's go take a look at the Canadian dollar as well. We might as well go look at that, just see if there's anything going on out here inside of the Canadian dollar. And I see as I look at this, I see no reversal candles or anything in play out here. So you've got, 2 of the 4, and you've got the big one. You got the mother lode, the euro, that's suggesting, just hinting to you and I that maybe it's trying to make another attempt at a change in trend out there. I do believe we are going to see a massive change in trend in the euro. Now, I know that I am the only one in that camp. Not the only one, because I've got a lot of friends out there. They're called the large commercial traders out there. And that group, if you like sailing on yachts, big yachts out there, well, then you want to be on their boat. The problem is they don't tell you when they're about to push off from shore out here. Of course, they're not really pushing off from shore, but they don't really tell you. That's why we got to go find clues out here to help us understand that. Okay, so we know what's going on we believe we have a better picture of what's going on inside the currency marketplace. That helps us to understand and go evaluate what's going on inside of the commodity marketplace, or at least I believe that it does. So as we go take a look at the commodities, let's go take a look. Let's switch over into the current contracts here. Let's take a look at the December contract here for light sweet crude, trading off $1.49 as we speak right now. This is, it's a monthly chart we have on our screen out here. Let's come take a look. It's a little bit too long of a picture out here. Let's go take a look at a daily chart, see if there is anything at all that would indicate to us that maybe there's some kind of a turn. So we can see light sweet crude this morning getting down to 75.84. If it finished the session like this, maybe if it finished up about 77.50, you'd have a little hammer candle out there. When we come back, let's continue taking a look at Texas tea, light sweet crude. This is Steve Rhodes. This is TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We were trying to get a feel for what's going on inside the commodity sector out here. So we're looking at light sweet crude. We went into that breakout here. Now the day's not over, but you can see that the bulls are trying to take a hold here. Now, if we take light sweet crude back, pretty much a linear move down. If we're going to take a look at A to B equals CD patterns out here, there's a number of them to the downside, certainly on the daily chart as we're taking a look at it. If we're going to try to find maybe expansions of swing points, that's really where I would probably start first, just to see if we're near any kind of expansion level. And here I'd be looking at the swing point low from, it looks like January 13, 2014, from that low to the high that was put in here on June 25th. And lo and behold, prices made a 1.6 expansion of that. In fact, $77 even Steven is the 1.618 expansion of those two swing points. When a market gets stretched what you're looking for are those stretch points out there. And if you take a look at those stretch points inside the market, you're looking at a 1.272. You're looking for a 1.618. So plenty of A to B equals CD down patterns inside of light sweet crude. And what happens is when you get to that 1.618 level, as an example, that would form your butterfly. So I was talking about butterflies. I don't know, is there a coincidence out here? I just simply decided to talk about the caterpillar and the cocoon and the butterfly out there. And then that led to someone saying something about nature's way, or nature finds a way. And then that reminded me about one of my favorite bands as a young lad out there, Spirit. For any of you that remember that great, what I consider to be one of the great rock bands, I used to go watch those guys in Detroit probably play they would travel through Detroit probably at least once a month, if not more than that out there. So in any event, so you've got a butterfly pattern here that could be forming today. Now remember, we use these expansion levels. We're not looking for the exact number to be hit of $77. We saw light sweet crude get below that. Doesn't mean this pattern is going to work. What we can say is you'd like to see some type of reversal candle today. You'd like to see, it looks like the only candle you'd really see other than a major reversal would be the potential for a hammer candle to form. And in order for that to occur, you need to probably get price into about the 77. Let me see. I'd have to say, I'm just visually looking at this, right around 77.50, 77.60. The higher, the better out there for the most part. Of course, getting up to 78.36, that would be one heck of a nice reversal signal inside of a potential butterfly pattern out here. So that says, let's go check out, just like we did on the euro, says to me, let's go check out an intraday time frame and see if we can identify anything out here that would help us out. And as we take a look at that, well, this candle here is not a hammer candle. That body is way too big. This is the one from 5 a.m., so from 5 to 5:30 this morning. But what we do have here is you do have a little bullish engulfing candle right here that formed between 8 and 8:30. But, you're going to see an A to B equals CD pattern to the upside if, in fact, on an intraday chart, if you're going to see some kind of change in trend take place. So we have not seen that yet inside of a light sweet crude. But that's what you should be. That's what I would be. That's what I am looking for out here, is to identify a bottom. The reason is because I want to be on board, that big, beautiful yacht that the commercials, because they're going to throw a big party out there, and we want to be on board that party. It means sometimes we got to probe to try to find the bottom out here and keep looking, but we should continue to keep looking. Same thing when we take a look at gold and silver. I mean, these guys are throwing one heck of a big bash out here, and of course right now what they've been doing is they've been bashing everybody's head to move prices lower, and they've been doing a pretty good job of it. If we go take a look at Goldilocks right now, you got gold trading out at 1160, 620, trading off about $4. Folks, I was working out last night and had CNBC was on in the distance, and one of the guys, I just cracked up laughing. He was talking about some kind of camel puke pattern inside of gold out there. Just about fell off of the bike that I was riding out there. But in any event here, you know what? Gold has been puking here as of late. So let's go take a look at gold, see what it's actually doing. Let's try to redraw a potential A to B equals CD pattern out here. What we have seen is gold's really been consolidating, kind of like the S&P yesterday. It's been consolidating here down at the bottom. So we know we've got a consolidation pattern, or it looks to me like we have a consolidation pattern, the low of which, we're going to do this when we get back from break. From about the 1160 area to 1174. So the next move inside gold should be $14. Either the upside, taking it about 1188, or taking you to about the 1146 range. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 6 points. Grain out at 17,359. S&P up 3 at 2014. Composite down 13 points. She's traded 46.25. Russell 2000 off 250. Traded 11.67. DAX is slightly green. FTSE slightly red. Leading the charge the upside. Rock, Tennessee. RKT is a ticker symbol of 5% of 277. Bloomin' Brands. You got to love those bloomin' onions. Just don't eat too many of them. But they're up about 11%, up about $2 this morning. Expeditors International, they're up 4.5%, up $1.95. Archer Daniels Midland ADM is the ticker symbol, up about 3 7/10% out here. Direction Daily Junior Gold Miners up 6% this morning. We got to check in on the gold miners out here. Of course, I'm looking at a bunch of gold stocks there. They're red. They're red and dead out here. No, they're not dead. They're ready to come back to life. Delta Airlines up about 4%, up $1.58. Hey, Delta, you be good to my youngest out here. She's flying today to San Francisco to interview with some companies out there. So hope she has a great trip to San Francisco. L Brands, that's up 2% here this morning. You've got United Continental Holdings up 2 6/10% out here. Office Depot up 20%, up $1 as we speak. Leading the charge of downside off $80 as we speak right now. Priceline out with earnings here this morning. They're getting the Kibosh straightened out at 11.18. Regeneron Pharmaceuticals down $20, down about 5%. Herbalife, I think they were up yesterday, maybe not. They're down today, off $8 and change, off 15%. Michael Kors out with numbers. They're trading down about $6, off about 8%. Retail me not. They are not. Down 24%, off about $5. The Vitamin Shop, pretty cool environment, that Vitamin Shop. Nonetheless, they're having a sale this morning. Stock price is down 8%, off $3.60. What else do we have to the downside here? Border Free, BRDR, they're off about 29%. Again, our call number 877-927-6648. Feel free to give me a call. Would love to hear from you. We can take a look at your stock chart and try to figure out what's going on. Let's go take a look at the rocket ship out here. Rock, Tennessee. RKT is the ticker symbol. They're out with their numbers, generating sales of $2.6 versus $2.49 billion out there. Net income, I would tell you what it is if I could find it, but let's just simply go take a look at the rocket ship. Let's change this to a daily chart. Might make it a little easier for us to identify where Rock, Tennessee is headed to. Right now, taking out a swing point, B point, a bunch of swing points, and doing it with what looks like volume. Now, 221,000 shares is what has traded so far, but it's a July 2nd high. That had 1 million shares, so no problem taking that out. Another little swing point in April of 2014, that had 898,000 shares. No big deal out here. Looks like the Rocket, Tennessee, is going to be heading back to its swing point highs. That's out here from March the 4th. That looks like it's 52-week high out there. That is priced out at about high 58.20. You're trading at 54.85 right now, so looks like it's got about $4 more before it gets up to that level. I pull this back a little bit further, see if it can clear that, might as well go and trade all the way up to its swing point from September 16th back in 2013. That's up right around the $63 area. So that looks like a little rocket ship this morning. You've got AmTrust Financial up 6.5%. Oh, we did have it. Well, there we go. AFSI is the ticker symbol. So that's up $3. Let's go see where AmTrust Financial is moving into. AmTrust here gapping up this morning, already testing its swing point high, its most recent. Now, excuse me, this one's going to struggle a bit, because it should struggle a bit. Had volume off of the highs here back on October 29th. 3.2 million shares to the downside. So this should struggle at around the 5108-ish type area, and that is ticker symbol AFSI. Also to the upside this morning. We've got Interactive Intelligence. That is up. ININ is the ticker symbol, up 14%, up $6 and a change out here. Let's go check this out. Of course, ININ, that always reminds me of Innocent Gun, one of the great beers out there. If you've never had an Innocent Gun, you ought to add that to your list of things to do. But if we take a look at ININ, this thing has had some problems out here. Big, huge move to the downside. That is on a trading session of May the 6th. This had 1 million shares to the downside. It's done 111,000 shares as we speak right now. So this should have some pretty significant resistance between the range of 61.51, and this high out here of about 57.59. Here at about 54.63 as we speak right now. Ticker symbol ININ. If we take a look at, let's go take a look at things moving to the downside. Let's start off with Priceline trade out at 11.19. Looks like I don't show the numbers here, but we can take a look at the numbers of the stock, figure out where this thing is trading into. Now, we take a look at Priceline. It's got a little bit of a high volume high out here. Eventually, price wants to get back up there. This could be forming the C point of an A to B equals CD to the upside. We'll just have to watch the volume today. But it's got some nice volume out here. Back on August the 11th, it's eventually going to get up there. That high is at 12.81. No, that's the open. The high is at 13.29 out here. Pulling back with some pretty decent volume so far this morning. 685,000 shares out here. That was after making and moving higher. Now, what actually happened inside of Priceline out here as we take a look at it right now? Let me come over here. Let me just delete a couple things from the stock chart. What I notice here inside Priceline now is it had a little bit of volume right up here. Here's where it is. If we take a look at this trading session from September the 5th out here, it's September the 5th. This acted as the resistance level out here. We saw this little bit, and I can use both the 5th and the low of the trading session of the 4th. So those blue lines going across my screen, you had volume there of 1.7 million shares, and as price was moving up into it, had some pretty nice accelerated volume on October 31st, 1.5 million shares, and then yesterday, 1.1 million shares, but notice how that acted as resistance. So the real resistance line inside of Priceline is somewhere between 12.11 and 12.16 as we speak right now. It's got pretty good volume coming out to the downside out here. It does have a high volume low, so price could move back into the October 13th time frame. That would be anywhere between 10.72 to 10.17, and that is what's going on with inside that equity. If we take a look at Regeneron Pharmaceuticals out here, REGN is the ticker symbol. They are off of their session lows so far. They also were out with numbers. Revenue of $726 million. Versus 597. Sounds like about a 15% or so increase, so that looks pretty good. Net income, $80 million versus $141 million, so they're missing the net income line. Nonetheless, if we take a look at Regeneron Pharmaceuticals, it's got an A to B, a confirmed A to B equals CD to the upside, big time out here. That was big time was the trading session of October 17th. 2.4 million shares was taken out a swing point that had 1.5 million shares. Price so far this morning has just simply come back into that B point, that B point high being 369.31. Low so far this morning, 369.87. Hasn't gotten completely down there. Volume so far, 338,000 shares. Again, it's going into basically 2.4 million shares. So we'll see if it how volume trades out here. But it does look like Regeneron Pharmaceuticals, to me, wants to continue to motor on up into that 419, 420 level. Herbalife, let's take a look at that. HLF is the ticker symbol, off $7.40, down 13%. Yeah, it did move higher yesterday, and gapping down this morning. Of course, Herbalife, I believe this is still got Carl Icahn and Einhorn, I believe, aren't they the guys at the dance inside this equity? So this is more of a psycho stock out here. And but if we do take a look at it and try to figure out where this thing might be headed to, I'm going to put this on a weekly chart is what we're going to do, see if we can get rid of just a little bit of the noise out here. And if we take a look at this, what has this done? Come on, pop up. There we go. Give me some volume out here. There we go. So you've got this trading back into the December 2012 swing point that's got some volume. You really had volume on that very next trading session out here. And right now this week, it's just really, or this month so far this month, it's really testing the top of that, which is 47.45. If it closes inside 47.45, no reason for it to not try to make a run for the lows out here. You've got a B point from a weekly basis. That was from March the 1st. That had volume of 78 million shares. You got below that with 38 million shares. So this really doesn't have enough volume to bust it down. So it's really kind of inside a trading range out here. That is on Herbalife. HLF is the ticker symbol. Hey, let's take a look at Michael Kors. KORS is the ticker symbol. They're out with numbers as well. Their second quarter net income, $207 million versus $145. So not too shabby there. Revenues look like revenues. In North America, they were up about 30% out here. Nonetheless, Michael Kors is trading off about 8% this morning. Let's put this on a daily time frame, get a feel for where this is going to. On a monthly chart, anything out here? No. Let's take a look at the daily time frame for Michael Kors, get a feel for where this is headed to. So it's got this... So Michael Kors, well, I've been looking at I've not taken a look at this stock here for quite some time. So well off of its highs that occurred back here in February 2014 when it got up to a price point of 101. So you're down about a good 30% since then. So let's try to figure out where Michael Kors might be headed back to. Looking for some volume bars out here where this thing. I'm going to put this on a weekly time frame. See if the weekly gives us any better picture as to where Michael Kors may find some support out here. So as we look at Michael Kors, as I look at Michael Kors for you, it broke out right about here. Okay, so the last breakout, let's put the blue horizontal line on my screen out here. The last breakout really took place right at about this trading session here, which is $70.59. Now, when I do that, what I am looking at is first I'm identifying the high volume breakout, if you want to call it a breakout, and we will in this case here. It was a pretty decent wide price spread-ish accelerated volume over the course of the time period here of October 28th through November the 11th out there. So not too bad that way. And what I'm doing is I'm just simply coming back to the swing point just prior that's got some light volume out here. And it happens to take us back into the trading session for the weekend of October 7th, 2013. It might have been October 4th, 2013 as well that made a fairly decent low in the marketplace, if I'm not mistaken. I could be mistaken about that, but, so kind of lines up with that. 14 million shares down there, and as prices pulled back into that area, remember what it's really going against is more like 34, more like 35, more like 61 million shares. But nonetheless, it pulled back with 15 million shares. So 15 million shares going into the 15 million share area. Really not too bad. So the question is going to be, is it going to take this out? It's trading right at that level right now. 70.59, you're trading at 70.56 out here. That's the weekly chart that we're taking a look at. If it takes that out, then where is she headed to? Well, I'd have to say where it heads to, where it may find some support, Michael Kors, probably between the price range of about $56.39 to maybe $64.80, and you're at $70.83 as we speak right now. But that's what Michael Kors has got its back up against the wall of a potential support area. It's just hung out here as of late. It may continue to find support inside of this area here. Wouldn't be surprised if it in fact does. Let's take a look at Retail Me Not. They're on sale here this morning, down 26%. What's the news out here? Their CFO, Douglas Jeffries, resigned. So that's not necessarily good, but nonetheless, and this thing is so it's a weekly chart. Looks like the IPO came out right around July of 2013. Basically, you've got almost nobody inside this equity that's in a winning position. And, there are a few people because there's somebody who bought the stock at a price point of $14.44. You're trading at $15.10, and they would have done that back around the week of October the 6th, 2014. But for the most part, this stock chart looks fairly miserable out there. That is on Retail Me Not, SALE, is the ticker symbol. Also to the downside out here, we won't just totally get too enthused about the downside, but let's take a look at a couple things here. Let's take a look at Stone Energy. SGY is the ticker symbol. Stone Energy with a third quarter loss of $29 million versus a profit of $36 million. Boy, that is a reversal of fortune out here. And this thing is headed back into its swing point, it looks like, either back from the April of 2013 area. Right around the low out there is about $17.34. You're trading at $20.50 as we speak right now. Let's switch over to the daily chart. Looks like there's probably a gap down here this morning. A little bit of a gap down, taking out its most recent swing point from October 15th, 2 million shares. You've done 454,000 shares in the first 19 minutes of trading, so it's taking that out as well. You pull this back a little bit further. Anything stick out here? Not a whole lot. That looks positive for Stone Energy. SGY is a ticker symbol. Now, let's switch over. Let's go take a look at some things that are moving to the upside. Let's go take a look at Red Robin Gourmet Burgers. For all you burger folks out there, have you ever been to a Red Robin? I have. I'm not a burger guy. RRGB, it's up 12%. We go back and take a look at it. Oh, it's got the double. It's up $6.66.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Kind of a flat market out here. The Dow's up a point. S&P is down 3 points. And before we went to that break, we were talking burgers. Now, I used to live in Detroit. That was 30-plus years ago. And so when I was in my burger-eating days, I was a joint over on Woodward Avenue. I think it was called the Red Coat Tavern. I think that was in maybe like Royal Oak or something like that. I used to live in Detroit, so I don't know if that place is still around, but they had a pretty good burger out there. But let's go take a look at Red Robin Gourmet Burgers out here. If we take a look at Red Robin Gourmet Burgers, they have gapped up this morning. Volume behind the move, 176,000 shares. This has got a little bit of resistance, a little supply line here. This thing had moved down. Looks like they had some bad meat or something. That was on August the 14th. This thing traded down, gapped down with 3.6 million shares out here. So it should have some fairly decent resistance, a pretty decent supply line out here at the top of the gap, meaning the low of the trading session from August the 13th, and that low is $63.12 out here. Let me take Red Robin Gourmet Burgers back here a ways. See what else this thing may be doing. Boy, that was some pretty big volume that came out of this thing back here on August the 14th. Nonetheless, those lows have been tested, so there's no more real selling down there. We'll see if a Red Robin can get back above a resistance line. It would do itself really well to get above and close above $63.12 out there. Ticker symbol again is RRGB. Okay, also to the upside, what do we have percentage-wise out here? You've got Continental Building Products, CBP is in Paul X. Continental Building Products out here. Now, it looks like they were out with their numbers. I don't see the exact numbers out here. Nonetheless, let's give it its debut here at TFNN. This is an IPO that takes you back into February of 2014 out here. It's traded up as high as the price level of 2051 and down as low at July 28, down at 1258 out there. Right now, it gapped up into its most recent swing point high. It's doing it with volume. That swing point high from the trading session of September 10th, 298,000 shares. You're up already today with 111,000 shares out here. If it can take that out, it's a small A to B equals CD to the upside pattern out here. Thus far, struggling, but it's moving up, and it should at least test those highs. Those highs being, again, $17.90. Okay, so we haven't really talked much about the markets. We'll do that during the next hour. Basically, it's a market that should chop around here for a while. Could frustrate many out there. I don't know how long the chop is going to last. Maybe through next Friday. That would be a pretty decent time frame out here. Will the elections here in the United States have any kind of impact? I don't know the answer. I just know that the seasonal pattern suggests that what we see here is a chop. So we'll spend more time taking a look at the indices, taking a look at the ETF structures, maybe what's going on inside the S&P 500, some of the stocks out here. Again, we're trying to identify. I think our biggest focus today, tomorrow, is going to be to see, are we seeing any kind of a turn here inside the currency market, therefore inside of the U.S. dollar, and therefore inside of the commodities. As we speak right now, that's not what we've seen here. You've got the light sweet crude that's trading up $2, trading out at 76.78 out here. With regard to the euro, that's also given back some of its gains when we take a look at the euro futures. So we'll continue to look at that through the next hour. But folks, it is Terrific Tuesday. Make sure you get out and vote. Do your thing out there and be like that caterpillar. Be like that caterpillar. Go ahead and climb a tree, spin a cocoon, and then just simply let it open up and fly like a butterfly. Have a great Tuesday, folks. Thanks for joining us. Look forward to seeing you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.